But before we begin our event for today, there are some housekeeping notes to be highlighted. We wish to inform all participants that this event is certified with 10 SIDC CPE points, which are eligible to CMSRL license holder only. And for you to be qualified for the CPE points, please ensure that number one, you have completed the pre-assessment form before the event started, and you remain logged in using your full name in the Microsoft Teams platform for the entire session. Please be reminded that your time in and out of the system are being recorded. And you need to complete the post-assessment after the session ends. And please be noted that the post-assessment form will be open at 12 p.m. and will be closed within a week after the webinar session. And all our learning materials have been uploaded in the learning platform. And for those who register for learning hours, kindly scan the QR code, which will be shared later for attendance and course evaluation. Okay, to start today's event, I would like to call upon Mr. Imran Azman to recite the doa.
Al-Fatihah. الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين وعلى آله وصحبه أجمعين. اللهم إنا نسألك لسانا رطبا بذكرك وقلبا مفعما بشكرك وبدنا هينا لينا بطاعتك. اللهم إنا نسألك إيمانا كاملا ونسألك قلبا خاشعا ونسألك علما نافعا ونسألك يقينا صادقا ونسألك دينا قيما ونسألك العافية من كل بلية ونسألك تمام الغنى عن الناس وحب لنا حقيقة الإيمان بك حتى لا نخاف ولا نرجو غيرك ولا نعبد شيئا سواك واجعل يدك مبسوطة علينا وعلى أهلنا وأولادنا ومن معنا برحمتك ولا تكلنا إلى أنفسنا طرفة عين ولا أقل من ذلك يا نعم المجيب. Oh Allah, grant us a soft tongue that always remembers and mention your name, a heart that is full of gratitude for your blessing, and a light body that is obedient to your commands. O Allah, grant us perfect faith, a humble heart, useful knowledge, and a truly firm conviction. O Allah, grant us a wise and excellent way of life, and save us from all dangers and disasters. We ask you, O Allah, for sufficiency so that we do not have to rely on the help of others. O Allah, give us true faith so that we do not fear or hope for anyone other than you. Spread your mercy upon us, our families, our children, and all those who are with us. O Allah, do not leave our fate to be determined by ourselves, even for the blink of an eye or an easier and faster way. O Lord, who answer prayers, please grant our request. O Allah, in conjunction of BIMB Securities ESG Corporate Day event today, do guide us to be among those whom you have guided. Do grant us a good health and forgiveness, so that we shall be among those whom you have granted good health and forgiveness. O Allah, you are the most forgiving and most merciful, and you love to forgive, therefore forgive us. Forgive all of our sin. ربنا
Thank you, Imran, for the recitation. Members of the floor, now let's start our event with the economic presentation by our very own Chief Economist, Encik Imran Nurginias. Just a little bit introduction. Encik Imran has 25 years of experience in research, especially in economic, capital market, and currency. He started his career in banking and finance since 1993 and worked at various departments such as international banking, retail banking, and corporate banking, as well as in the foreign exchange market. He started his research career as an equity economist at MIDF Investment Bank and later joined Kuwait Finance House Global Research as Global Currency Strategist and then Investment Bank to head FX Treasury Research Team. He holds Bachelor of Economic degree from University of New England, Australia, and he is also a Certified Islamic Finance Executive, CIFE, from Etika Institute of Islamic Finance, Dubai. He completed his Masters in Comparative Financial Studies at University Islam Malaysia, and currently he is pursuing his Doctor of Philosophy in Comparative Finance at University Islam Malaysia. So without further delay, it is now my pleasure to invite Encik Imran Nurdinias with his presentation. The floor is yours, Encik Imran.
Okay. Thank you. Assalamualaikum. For this economic presentation, as per normal, I will start with the global economy and then we go to the Malaysian economy. So I think if we look at the year 2023, of growth for many economies is projected to moderate after the robust pandemic recovery. And if you look at the next slide, we see that the IMF and OECD projecting the world economic growth to moderate to around 3%, and World Bank forecast growth of about 2.5% for 2023. While supply condition improve, spending activities normalize after the unsustainable surge in the past years, partly due to the revised spending following economic reopening, and global policy tightening by monetary authorities to contain inflation is also expected to bring about more moderate growth this year, particularly in the advanced economies as interest rates were raised to more of international trade and global production activities have also. We foresee the moderate growth prospect to continue in the fourth quarter. However, we anticipate a possible pickup in the external demand for manufactured goods, particularly in the E&E products. And if we look at the certain countries, for example, US, the economy continues to expand despite about 525 point worth of interest rate hike from the Federal Reserve since March 2022, and the economy increased, the GDP increased at a 2.1% year on year in second quarter, slightly higher from the revised 2.2% pace in the first quarter, and it's expected to increase by 2.1% this year. And China yesterday just released their third quarter GDP growth. It came in at 4.9% year on year in third quarter, and on the quarterly basis, it strengthened to 1.3% from the downwardly revised 0.5% quarter in the second quarter. And I think given the first 3 quarters growth of about currently for China is about 5.2%, I think there's a possibility that they will achieve the target of 5%. And as for next year, I think the global economy is projected to grow by 3% as a result of moderate growth in both advanced economies and also the emerging market and developing economies. And advanced economies growth is expected to moderate further to 1.4%, which will continue to weigh down, but the global growth and the USD GDP is anticipated to grow at a slower pace by 1.5% as tighter financial conditions moderate demand pressures. The growth in the euro area is expected to expand slightly to 1.2%, supported by stronger services and tourism activities. Sustained growth in developing and emerging economies are crucial to support economic growth. The emerging market and developing economic growth is projected to expand by 4%, with China economy is forecast to moderate to 4.2%, underpinned by continuous lower investment and also bearish labour market. The ASEAN 5 growth, the ASEAN of Malaysia, Philippines, Thailand, Singapore, and Indonesia, they are forecast to strengthen to 4.5% from 4.2%, with Philippines as a major contributor to the ASEAN economy, followed by Indonesia and also Malaysia. Okay, on the global inflation, the slide 6, basically, I think global inflation will remain high in 2023, largely reflecting a steep drop in energy prices from late 2022 through to mid 2023, and the fall in the headline inflation has been somewhat steeper than previously expected, and at the same time, there remains a wide divergence in inflation rates across major economies. And for example, headline inflation is close to zero in China, but it remains well above central bank targets in almost all advanced economies. The core inflation has also begun to decline, but it at a more moderate pace, and several countries have yet to turn down. So goods price inflation is declining, but services price inflation remains persistent and is set to remain so based on the current indicators. So going into the final quarter of the year, we expect the soft price pressures will continue as demand condition would pose less pressure on price outlook, taking into account the expected moderation in aggregate demand as a result of high interest rates and tighter credit. So going forward, I think while inflation continues to moderate, and disruption to supply stability will be the key reason that will keep price outlook elevated. The price pressure could also come from rising energy and also commodity prices. Inflation basically, for example, in US had the latest inflation in US currently about 0.4% month on month in September, and on year-on-year basis it has steady at 3.7%. Core inflation increased 0.3% month on month, and annual core inflation continued to edge slower, falling to 4.1%. In UK also, it has slowed down to about 6.7% in September, and in the Eurozone, the CPI was about 4.3%. And in Asian region, headline inflation is towards the pre-pandemic average as supply side pressure wane and also monetary tightening took hold. So, as mentioned earlier, inflation is largely absent in China due to weak domestic demand and falling factory prices. And for inflation, it was forecast for Southeast Asia, it was forecast down by the Asian Development Bank to 4.3% in 2033 from 3.3%, and for 2024 it was expected to be around 3.2%. And underpinned by the expected further tightening of monetary policies, the global inflation is forecast at 5.2% in 2034. With the advanced economies projected at 2.8% and emerging and developing economies at 6.8%. Okay, next on the monetary policy, the reduced concern over inflation requires no further hike, and for most economies, central banks have mostly starting to keep their interest rate unchanged after raising interest rate in the previous years and early part of the year. This was underpinned by the easing inflation and policymakers paying greater attention towards supporting growth. And if you look at the major central banks like the ECB and also BOE, recently they have signaled the end of policy tightening and no more hikes will be necessary as inflation had eased, and also will grow especially for the euro area. Currently it's quite subdued by the previous tightening, but high interest rate may be kept for a longer period as inflation remain above target. So although we argue for no more hike, we opine market volatility in the fourth quarter this year will continue, and sentiment will be influenced by the decision by the US Federal Reserve despite the still hawkish stance after the September FOMC meeting. We look, the Fed officials have been raising interest rates since March 2022 in an effort to slow the economic growth and wrestle inflation under control. But I think policymakers are likely to keep the door open to a final rate increase this year. But the market expectation around the possibility of a rate hike has increased marginally. But if we look at the news flows, we see that the Fed officials have been emphasizing the importance of the increase in the treasury yields as a factor that will tighten financial condition and reduce the need for another rate hike. So, Fed officials in recent days have signaled that they are likely to hold short-term interest rates steady at the next meeting in end of the month, because of the run-up in long-term interest rates of the past month could slow the economy. But currently, we are concerned about the tensions in the Middle East. The tension rose in because of Palestine and Israel launch attacks upon each other, which are still currently underway and escalating. And the prospect of oil price swings continue to harm investors after surges in crude oil as well as the natural gas. We see the knee-jerk reaction to the most recent escalation after the attack on the 9th of October, where the Brent oil jumped by 5% and WTI oil jumped by about 4.2%. So I think the scale, intensity, duration, and also breadth of the ongoing situation will be important factors in determining the impact and oil price in the coming months. So at the moment, I think we are monitoring the situation in the Middle East and also the impact of the war in the Middle East to the energy, especially oil and also natural gas. So I think overall, on the risk for the global economy, the recent rise in oil prices casts doubt that the inflation outlook will remain moderate. The higher bills for energy and also fuel charges could result in higher utility and transport costs, and this will affect cost pressure and various industries. So we still, inflation is still the risk to the global growth. But although we do not expect another rate hike, we believe the focus and attention in the financial market will continue to be impacted by the decision by the US Federal Reserve. The another challenges will be the China growth, because currently we see that how volatility in the Chinese economy and the stronger than expected slowdown in China to it will be an additional risk to the global growth. And again, as you mentioned, the monetary policy will also be the challenges for, let's say, because there's still uncertainty about the strength and speed of the monetary policy mechanism, and commodity prices because of, as mentioned, because of the current situation in the Middle East, the commodity prices, especially oil, natural gas, might be impacted. So if it happens, and then it will basically push inflation again. So we are concerned about the current situation and geopolitical risks with the Russia-Ukraine war still ongoing and the new tension in the Middle East. All this will have a downside bias to the global growth if it continues and prolonged. Okay, as for the Malaysian economy, in slide 11 is our highlights on the what we expect in 2023 and 2024. Overall, I think we expect the economy to grow slower at about 2% in the quarter due to high base effect and also external slowdown. But we foresee a stronger recovery in the final lap of the 2023, which is fourth quarter of 2023, harping on better recovery in China, elevated commodity prices and steady domestic demand. But overall, we revised our GDP growth to about to 3.7%, mainly from our earlier forecast of 4.5%. The softening growth is mainly due to contraction of external trade performance as global demand is anticipated to be slower than the previous year, and negative effects of tightening monetary policy in major economies, weaker than expected China's economic recovery, and normalization of commodity prices among the downside risk, among the downside pressure to global demand in 2023. But Malaysia's external trade will continue to benefit from increased global demand for commodities, especially palm oil and also crude petroleum and also LNG. And we expect prices for CPO and Brent stay elevated at around 3,790 per ton and USD 90 to 100 barrel for 2023. And moving into 2024, we expect a bright prospect for external trade as well as primary sectors. We view that GDP growth, we forecast GDP growth of 5%, and we view that our growth forecast was underpinned by broad-based sector growth. And if you look at basically by sectors, the economic growth next year reflects expansion in all subsectors, which is services, construction, manufacturing, and also agriculture. And we also expect some recovery in the mining sector. We also expect pickups in both domestic and external demand or resilient private consumption, as well as recovery in exports and imports of goods and services. In the next slide, I think the domestic economy has been anchored by continuous upbeat consumer spending and also busy tourism-related activities, and retail trade growth posted 6.7% year-on-year growth in 2023, in August 2023, which was the strongest pace since March 23, and distributive trade sales increased by 6.7% year-on-year. So overall growth in retail trade highlights the strength of consumer demand and the resilience of the retail industry in Malaysia. And the resilience of consumer demand is in tandem with the healthy job market development and softening inflationary pressures. And looking ahead, we foresee sanguine domestic outlook for the remainder of the year, further pick up into tourism activities and supportive and accommodative economic policy from both fiscal and monetary policy. And talking about the tourism, we've seen that tourist arrivals had increased tremendously, and the government had revised their forecast for 2023 to about 18 million from earlier forecast of I think about 15 million had been increased to 18 million. And for next year, the number of visitors could return to pre-COVID-19 levels by 2025, and it was projected to reach about 23.5 million visitors with total receipt of around 76.8 billion. So it shows that tourism has been giving the economy some revival in both the spending and also the services sectors. And in the slide 15, we see that labour market continued on improving trend as employment rate maintained at pandemic low of 3.4% in August, and labour force and employment continued expanding 1.8% and 2.1% respectively, supported by the upbeat domestic economic momentum, and job market remains in good shape as reflected in continuous positive growth in employment. The strengthening job in our view will further reinforce consumer consumption and support overall GDP growth, and we expect unemployment to be around 3.5% for this year, and we return to pre-pandemic levels about 3.4% in 2024. And what has been encouraging is the labour force participation rate, which is currently is about 70.1%, which is a record high. So it shows that the employment in the country has been very strong and stable. Okay, for on inflation, the CPI maintained at 2% year-on-year in August. It was a 2-year low. The non-food inflation inched up slightly to 1%, and food inflation softened to 16-month low of about 4.1%. I think the average headline inflation for the first 8 months of the year was 2.9%, and core inflation was 3.4%. So the moderation of inflationary pressure is a positive signal, especially for domestic demand to stay on a stationary path in second half of the year. But persistent high domestic food inflation will remain as downside risk factor, especially with the shortages of supply may lead to potential spike in food prices. And I think moving forward, the government have forecast inflation to reach about 2.1 to 3.6% next year, and we expect inflation to average 2.2%. We know that the government is going to continue with their subsidy rationalization initiative, but at the moment we know that there's only about 4 categories, which is diesel, chicken and eggs, and also the electricity tariff will where subsidy will be taken off. So we might see some spike in certain time when the government implement the subsidy rationalization, but overall we still expect inflation to average 2.2%, because in the second half of the year, if you look at what we will see in the second half of the year so far, in 2023, the inflation rate has been very low. So because of the year-based effect, the second half inflation for next year might also be contained, and that basically will keep down the average inflation for 2024. Okay, but still, I think if you look at the consumer MIR CSI, the sentiment index has been on a negative trend in the second quarter of the year, and this is because of the towards pessimism towards the current economic environment, and we expect the third quarter sentiment to improve slightly because of I think consumers happy with what they've been promised during the budget 2024. Okay, on the OPR interest rate, Bank Negara maintain OPR at 3%, and for this year we only seen one rate hike, which was in May, where it was increased by 25 basis points from 2.75 to 3%. And overall, Bank Negara had increased OPR by a modest 135 basis points in the current cycle. And going forward, we expect Bank Negara to continue to remain vigilant in monitoring external factors and take the appropriate action if needed. For now, we don't expect to see any changes in the OPR for this year and maybe for next year as well. Okay, quickly on the IPI, industrial production had fell again by 0.3% after 1 month, rebounded to 0.7% in July. It was the decline was in line with the sharper fall in the external trade during the month. And again, if you look at the byproducts, we see that the export-oriented sectors continue to fall, but the domestic-oriented sectors continue to grow. So there's a slight divergence there, but all because of weakness in the external demand. And because of that, we see that our manufacturing PMI had continued to decline further, still in the contraction for 13 consecutive months, and but the sentiment is not only in Malaysia but also because for the ASEAN region, basically for September the manufacturing sectors had declined below the neutral level. The only exception was Philippines, where the MPI increased by 50.6, but other countries in ASEAN saw the manufacturing PMI below the neutral level, and because of the external lag in external demand, our trade also contracted by 19.8% year-on-year in August, and this lower that is consistent with the reduction in total trade, and export also the trade surplus, however, continued to expand, increase by 0.1% year-on-year to 70.3 billion in August, which was the 40th consecutive month of trade surplus. So I think moving forward, we still believe that the external demand will be affected, and because of that, the export orders point to a more substantial pullback in foreign demand. So as a result, we revised our forecast for both export imports to fall sharper to around -7 to -7.5% respectively. And however, in 2024, exports are anticipated to recover slightly, supported by better performance in global trade and improved prospects in commodity sectors. Okay, what we I think everybody is quite concerned now is on the ringgit. The ringgit currently traded around I touched 4.74 yesterday, and I think with the evolving outlook for the global policy interest rate, we also make moderate adjustment to our outlook for the US dollar over the medium term. I think the July hike by the Fed to hold its policy rates steady for the rest of 2023, and we expect trade-weighted dollar to be a little stronger for a little longer. And we are not anticipating significant further strength in the greenback, but because of the expectation of the Fed to continue holding the interest rate for longer period, meaning that there will be demand for the USD, and as a result, the USD will continue to strengthen against other currencies, including ringgit. So I think in considering the overall direction of the US dollar over the medium term, we still consider the depreciation to be the most likely path. But it is only once the market participants begin to anticipate Fed rate cuts in 2024, which currently market expecting most probably in the second half of the year. And once we know exactly when the Fed is going to cut the interest rate, and then we see the greenback to come under notable depreciation pressures. So we expect the dollar to remain supported as the market price in some cooling inflation at the end of the year, and it will pick up pace over the course of next year. So overall, for the ringgit, I think the fundamentals are strong, though the primary factor to our dollar ringgit forecast is our view of the US dollar. Okay, on the budget itself, there's nothing much has been revealed, except for, you know, that the government had forecast growth of about 4 to 5%, inflation 2.1 to 3.6%, and there's a expansionary expansionary budget where the government outlays come in at 393.3 billion, which is the highest, and overall it reflects the government commitment to accelerate the pace of fiscal consolidation and resume the gradual fiscal, and that's why the government said that for 2024 the fiscal budget will be 4.3%, down from 5% forecast for 2023, and there will be gradual decline in the budget deficit to about 3.5% by 2035. So overall, I think the economy, both for Malaysia and the risk for the Malaysian economy is quite similar to what we are seeing in the global economy, the inflation risk, the structural issues, capital volatility, and also the geopolitical risk. So at the moment, I think the whole world is monitoring what is happening in the Middle East, and because whatever happened there will have an impact on the overall economic situation globally. So what is happening there is very important to the global economy, but we believe that we hope that the war in Ukraine, in the Middle East will not prolong, and hope that things will settle quickly in that region, so that everybody will be safe from the extent of the war. So that's all from the economic outlook, and we believe that growth will be still biased to the downside if the war escalates further. So we have to monitor the situation there. Thank you very much.
Thank you, Imran, for the presentation. Moving on to the next session, we have now with us Associate Professor Dr. Aida Maria Ismail from UiTM, Malaysia's Faculty of Accountancy. She is the Coordinator for Innovation Management, Commercialization and Consultancy. Her research interests include ethics, governance, sustainability and forensic audit. She holds a Bachelor of Accounting from UiTM, Master of Accounting from University Putra Malaysia, and PhD from the University of Nottingham, UK. She has published in international journals and is a member of MIA and ACFE. Dr. Aida is dedicated to educating and researching in accounting with a focus on improving ethical and sustainable business practices in Malaysia. So without further ado, it's now my pleasure to invite Dr. Aida with her presentation. The floor is yours, Doctor.
Okay, thank you, Madam MC. I will share my slide. Okay, a very good morning to everyone. Assalamualaikum. Today, I'm actually going to share with you guys a topic on incorporating ESG, environmental social governance, towards optimal business models and creations of sustainable revenue. Okay, the first part is actually looking into how we need to actually protect financial markets and creating value for corporations. Okay, board are responsible for the governance of individual companies and protecting the value of the corporations. It is really important for us to know that financial market protection must be understood both from the corporate governance perspective as well as an individual responsibility perspective. This is because those who manage and direct corporations have a duty to make sure that they attend carefully to the corporations and its information, insofar as these are important parts of any financial market. Okay. And then we can see that shareholders two basic corporate governance observations are important for managers of corporation that are listed on the stock market. The first one is actually shareholders require a satisfactory return on their investment. The second one is actually managers need to ensure that corporation perform well. If they do not perform well, then sales of shares by shareholders will actually exceed demand for purchases of shares, and the stock price will actually falls. Okay, and in an extreme cases or circumstances, prices or share price of corporation will actually eventually fall to a point where other potential owners in the market believe the assets can be employed more productively under the new ownerships, and the corporation will be subject to a takeover, which often result in the old managers being replaced by new and better managers. We need and we must appreciate that the market is sensitive to rumors, manipulation, fake information, secret information, misuse of secret information, self-serving motivation, fraud, theft, and also unethical conduct at almost limitless potential. Moving on corporate accountability. Organizations are entrusted with significant resources and power and can significantly affect the economy, community, and also natural environment. As such, stakeholders require organizations to be accountable to their actions and decisions, and reporting is one method to support this accountability. Traditionally, organizations' reporting has involved disclosure of information in financial reports, primarily designed to communicate financial information to shareholders and debt holders. And these reports are commonly criticized as too narrow in scope to reveal the organization's impact on the community and natural environment. Because if we notice, normally the financial report or the report which is actually being shared by a corporation with stakeholders is actually focusing more towards financial performance. So that's why the critics actually highlighting the report is actually narrow because it's only actually focusing on financial information. Okay. And when we talk about corporate accountabilities and accountabilities, we need to understand that business need to explicitly consider to whom they owe a responsibility and what aspect of performance they will need to report. This is actually one of the scholars from conventional scholar, Milton Friedman, actually views that the single role of a business is to increase profit as long as it stays within the rules of the game. So when we talk about stay within the rules of the game, we are actually referring that organizations or business, it's actually their main objective to actually increase profit or to actually generate profit uh, 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 at the maximum level. But again, it's really important for businesses or organizations to ensure that whatever business operations and activities need to actually be within the rules of the game, where it needs to actually comply with all the rules and regulation, addressing the interests of stakeholders, for example, their customer, in terms of their custom, their religion, their belief. So that's why Milton Friedman said that performance of a business is not solely measured based on financial performance. Okay, there's actually other attributes and dimension that business can actually be assessed in terms of their performance. For example, when we talk about the non-financial element of factors. For example, if I were to actually relate to this topic, Milton Friedman is actually referring towards the environment, how actually business actually react and do their activities that actually will be impacting the environment as well as to the local community or society. People believe that corporation must earn a social license to operate and have a responsibility to make choices that benefit society and environment. So when we talk about social license to operate, this is actually not a document license, that business or corporation will actually have in order for them to actually run and do their business activity. This is actually, when we talk about social license, this is referring to the blessing or the agreement by the society for the business to actually conduct and do their business activities. Okay. I'm going to touch a little bit on global financial crisis, but the most important thing is that what happened and what are the impact from GFC in terms of the way corporations or business actually do their business. Okay. So among the major contributing factors for global financial crisis would actually be high leverage, inadequate governance, uncontrolled liquidity creations, growth of largely unregulated shadow banking sectors, and a lack of public information about the level and distributions of risk in the financial system. And the impact of global financial crisis, if we can actually see here, is that GFC provides a greater desire for change due to the magnitude of the problems caused and as well as the many years it has taken for economic to recover. So that's actually the impact and how it actually changed the business landscape. GFC significantly changed how people thought about business and society trust in business. As the GFC demonstrated, weaknesses in one of the pillars of sustainability can directly weaken the other pillars. So these pillars of sustainability, I will actually discuss later in my presentation. And this is often described in terms of a social contract. Okay, and a social contract is an implied agreement between an organization and society. And the terms of the social contract are the ways in which society expects the organization to operate. Okay, so the concept is also frequently referred to as the community license to operate. So it's really important for any businesses or any organization to be able to have this community license to operate, because for any organization or any business to achieve their objective and to sustain and survive in the industry, they will need to actually get the support from the stakeholders. And in order to get the support from the stakeholders, they will need to actually have this community license to operate. Okay. And some incentive tying sustainability issues to maximizing the value of the organizations and the shareholders' wealth is actually revenue effect associated with market growth or decline due to customer preference. Okay. And then we also actually looking into cleanup costs or fine for non-compliance with environmental regulation that business or organization engage, insurance cover incorporating environmental risks, research and development program to stay ahead of environmental regulation. So those are some of the incentive tying sustainability issues and maximizing the value of organization and also addressing shareholders' wealth. Okay. The statement of financial position can also be affected through, for example, impairments in the value of land because of contamination, plant write-off because of changes to clean production capacity, changes in the net realizable value of stock related to consumer preference for environmentally harmless product, and liabilities through remediations requirement. So we can see that those are, when we talk about incentive or uh, basically benefit that organizations or business would actually be getting if they actually tying with sustainable initiative. Okay. Next, moving on would actually be when you talk about, engaging with sustainable initiative. It also relates to corporations or business brand and reputations. So when we talk about brands and reputation, this is actually whereby social and environmental performance can affect an organization future reputation, brands, and its ability to attract talented staff and maintain consumer and public support. which is actually really important when you talk about, let's say, we talk about attracting talented staff. If your reputations, if your organization reputation is good, it actually attract a pool of talent that is actually, capable, competent, and would be able to actually, promote productive, activities in your organization. And if you can see, other than that, having a good brand and reputation would also actually maintain consumer as well as public support or stakeholder support. So since the GFC and amid a lingering recession that has intensified pressure from shareholders, companies are devising new CSR model that are more aligned with their core business goal and services. So if I'm actually talking about BIMB, securities, so maybe the CSR model would actually be mapped or tailored to your core business goal and also services, because there is no specific CSR definitions, and CSR model is actually very dynamic. It's actually, evolve from time to time. Okay, and when we talk about CSR, it also actually linked to risk management. CSR provides information for risk management purposes, and information from CSR provides some basis for business to deal with quantified and non-quantified risk. And when we talk about risk management and when we deal with quantified and non-quantified risk, I think the most very challenging um, for any organization to be able to address this non-quantified risk. Because I think if we can actually quantify, it's actually easier for us to be able to address those risks and way to actually manage those risks. But for the non-quantified risk, sometimes it's actually very hard to actually measures and very hard to actually quantify. Okay, and both direct and indirect environmental costs and associated risks will actually be tarnished brand and also reputations of a business. So CSR reporting enables user to assess any related costs and predict the future. Right. And when we talk about direct costs, this is actually impositions resulting from legislation, include cleanup orders, levies, and remediations expenses. And when we talk about indirect costs, it ranges from loss of business to increased risk, resulting in higher insurance and financing costs, and the opportunity cost of waste productions, treatment, and disposal. Both direct and indirect environmental costs, as well as the risk associated with tarnishing brand and reputation, affect business profitability. So one of the aims of CSR reporting is actually to enable information users to assess those costs and predict whether their future investment might actually be affected. Okay. Moving on to CSR, corporate social responsibility. As I mentioned earlier, there is no absolute definitions of CSR. Okay, the meaning of CSR continues to evolve over time. An absence of regulation in engaging with CSR, hence it occurs due to significant pressure from other stakeholders. So this is actually whereby you talk about corporate social responsibility. It is not a mandatory requirement, even from BURSA, as well as from MCCG. Okay, it is actually something which is voluntary. But again, we need to actually be careful. CSR reporting worldwide for some organization, the broader corporate accountability imperative has gone from desirable to expected to required. As I mentioned, this is actually voluntary. And now you can't actually say that because it is voluntary, you just, at your own, ease, whether you want to engage and do CSR reporting. But again, this is actually something which is actually demanded from stakeholders or from the public, whereby now business need to actually or required to actually engage with CSR and do CSR reporting. As I mentioned just now, it is actually normally due to pressure from stakeholders why business actually engage with CSR. Business consider a wide range of stakeholders' interests and seeks a balance of their interests, because, as we know, business is actually aim in generating revenue. But again, they will need to actually balance it with stakeholders or public interest. And I did actually mention just now, Milton Friedman did actually mention performance of a business are not only actually being measured in terms of financial performance, other factors need to actually be considered and be part of the measurement of business performance. Okay, and this is again, I actually mentioning business must earn a social license to operate. Moving on, we are actually looking into socially responsible investment, or SRI. So the definition from UN, Principle for Responsible Investment, defines socially responsible investment as an approach to investment that explicitly acknowledges the relevance to the investors of environmental, social, and governance factors, and of the long-term health and stability of the market. So investment can be used to direct capital towards better governance and better managed companies that are positioned to contribute to the goals of sustainable society. And there are many different approaches of SRI. It is helpful to think of some of these approaches as a spectrum of capital options. So we have here, for example, we have responsible investment, sustainable investment, thematic investment, and impact investment. So the first one, responsible investment. This is often based on concern about risk. Responsible investment consider a wide range of sustainability factors. This can involve negative screening, avoiding investment in industry that have a negative impact on society and the environment. It includes, for example, a company actually involved in tobacco activities, nuclear power, gambling, alcohol, fossil fuel, and so on. So that's actually what responsible investment is all about. The next one is actually when we talk about sustainable investment. So when we talk about sustainable investment, it involves more of a focus on investment opportunities that create both social and economic value. And I must say it actually involves the best in class investment, where investment are selected both for their ability to generate economic returns and to perform better on sustainability indicators compared with their peers in the same industry. And the third investment is thematic investment. Thematic investment is actually investment that focuses on one issue or a cluster of issues where commercial growth opportunities are created from social or environmental needs. So it depends if there is actually, any issues or theme which the business or the organization would actually wanted to explore, then it would actually fall under thematic investment. Okay. And the last one is actually impact investment. Impact investment focuses on placing capital to actively create a social or environmental benefit. And it may actually require some financial trade-off. Okay, for example, you invest in impact investment, your return from the investment may not actually be solely measured in terms of financial return. So there might actually be a return in a form of value created. For example, you invest in local community education, for example. The return may not actually be measured in terms of financial return. The return may actually be looking in terms of, the numbers of local community children are actually graduated from the university, for example. That is actually what we can actually relate to value creation created from the investment made by the business. And when we talk about social responsibility investment, it also actually relate to the concept of socially uh, uh, enterprises. Okay, and social enterprises are business that are set up with a social objective in mind. Okay, there are a series of models that have been identified. We have here innovation model, employment model, give back model. Okay, the first one, when we look at innovation model, this is actually whereby a company or a business using the model is developing a product designed to assist community that are at disadvantage. Okay, that is actually innovation model. You are actually creating an innovative, activities or product, and that would actually be assisting the local community which are at disadvantage. Okay, if we look at employment model, this is actually whereby a company or a business using this kind of approach in employing people who are disadvantaged at a fair wage. Okay, so that's actually the second model when we talk about social enterprise. And the last one is actually give back model. This is actually whereby a business that engages in a give back model, which is typically sell one item but ensure that for each sale, an item is donated to somebody which is in need. So those are social enterprises, and I'm sure you guys actually have heard, for example, social entrepreneurs, social businesses, and those actually an example of social enterprises. And normally it would actually be addressing any issue or challenges or problem which is actually happening in that community, and a business or company will actually come in and invest and do business activities with that community in solving and providing solution to their problem or challenges, and creating values in terms of producing a new entrepreneur from the initiative taken. Okay, and then next is actually CSR reporting. So when we talk about CSR reporting, this is actually it actually contributing to lowering the cost of capital through at least 3 channels. Okay, and then signaling the quality of the it also actually signaling the quality of the company. And then CSR reporting requires a clear visions and commitment to social and environmental value creation activities, and helps to identify risks and opportunities within the business, expanding a company relevant disclosures to support stakeholders' decision making, and reducing the uncertainty in assessing the company's performance. Okay. And when we talk about just now, it's actually on CSR reporting and how it actually, need to also consider and take into account externalities. So when we talk about externalities, okay, this is actually looking into, you know, uh, undertaking sustainability initiative requires an organization to comply various measures of its social, environmental, and economic performance. And when we talk about this sustainable initiative and looking into business or organization trying to compile all the various measures in terms of social and also environmental and economic performance, externalities will actually come in. Okay. And when you talk about externalities, basically it is actually an impact that the business has on external parties. And the impact can either be positive, which is benefit to the business, or negative, which actually involve costs. Okay. And those attributes basically are not easy to actually define and not easy to actually quantify and measure. Okay, some are easy, some are not. And most market transactions do not fully reflect all the costs and benefit generated. So what happened when business or company fail to actually, reflect all the costs and benefit generated from externalities? This actually resulted to cost may actually be understated or overstated, and it will impact to corporate profit. For example, cost of pollutions, penalty from law breaking, whether company or business actually incorporate those costs into the cost of productions or services that the business actually offer to the public. Investors seek to integrate qualitative and quantitative factors into their investment decisions. This is actually whereby the new trend now is that the stakeholders or the investors would actually wanted company or business to report not only quantitative information, but also qualitative information in the company's annual report. And this qualitative information sometimes is actually very difficult to quantify. And normally it is not in a form of monetary values. Okay, and what happened, I think from my observation, the qualitative information which is actually being reported by company or by business in their annual report is actually normally would actually be in a form of narrative, just an explanations what they have done, and sometimes it's difficult to quantify to capture in one accounting cycle. Okay, can I proceed? Okay. And accounting has emerged as a critical component in addressing this challenge. So I think moving forward, the expectations of investors and also from the public or stakeholders would actually be for business or company to be able to, quantify or to report both qualitative and quantitative information. Saying qualitative and quantitative information, I would actually be referring also financial and non-financial information in the companies or in the business reporting. Okay, and business profit do not incorporate many externalities, and but the argument is that business can only manage what they can actually measure. I think that is actually a statement normally being used by businesses, whereby if you can actually measure, then you can manage. So if you can't actually measure, how can you actually manage those factors? So that's why I think the role of accounting is actually uh, to quantify those qualitative factors and report it, so that it can actually be, even though it is not a financial information, but again, it is being reported, and investors or the stakeholders are aware about, activities and engagement of the business, which relate to that part of, strategies and so on. Okay. Okay, moving on is actually the reporting. This is actually whereby it's really important for business or organization to identify first the objective of the reporting process. Why you want to report? Is it a required or mandatory requirement by the capital market, or is it being pressured by the business or the company's stakeholders? So that one need to be clear, objective of the reporting process. And then the second one is actually stakeholders to be addressed by the reporting process. For whom is the report intended? So I think business or organization would need to actually be should actually identify who are their stakeholders on top of their shareholders. Okay, I think managing stakeholders' interest is really important in assuring sustainability of the business. Okay, so taking from that statement, business or organization will need to actually, be able to address those stakeholders' interests and incorporate those information which is addressing the interests of the stakeholders in their reporting. Okay, and I'm sure talking about stakeholders, business would actually have, a list of stakeholders that they will need to actually be addressing. And the strategy to address the stakeholders' interest would actually be business will need to actually analyze and identify which stakeholders' interests need to be prioritized. And based on the ranking, then business would know what types of information they will need to actually include in their report. Okay, and an information requirement of the stakeholders. That is another important thing, as I mentioned just now. What are the issues of the stakeholders that you are addressing in your report? And then this would actually guide the business or the company to actually know the cover of the report. Okay, moving to the next one. This is actually looking into the theoretical perspective. When we talk about motivation to present social and environmental information to the public or to the stakeholder. The first one is actually when we talk about the first theory, which is actually theory of enlightened self-interest. Uh, Enlightened self-interest theory actually suggests organization provide social and environmental information to stakeholders if the organization itself will benefit from doing so. Example, by less regulation, better reputation, or improve access to capital. The second theory is actually stakeholders theory, which actually recognizes that a wide range of stakeholders have some legitimate claim over the organization. Okay, this legitimacy may arise from the recognitions that the stakeholders are affected by the activities of the organization, or from the recognitions that the stakeholders have power and resources that can affect the organization or the business. The third theory is actually looking into organizational legitimacy theory, which suggests that organization or companies need to justify and earn its right to operate, given the impact it can have on society and the environment. Okay, this right to operate is in the form of a social license, which I mentioned earlier, and implied agreement between the organizations and society that the organization will conduct in accordance with society's expectation. And the fourth and last theory would actually be institutional theory, which suggests organizations or companies' behavior tend to converge so that as some organization adopt CSR and others organization would actually follow. Okay, so just a little bit on certain relevant theory actually, and how those theory actually explain business or company's motivation engaging with CSR or sustainable initiative. Okay, the next one or moving on is actually the emergence of CSR. Okay, when we talk about CSR, we are referring to sustainability reporting, corporate social responsibility reporting, global reporting initiative, GRI, and basically those reporting would actually be looking into the three pillars, okay? Environment, social, and economy. Okay, first, I would actually be discussing on the first pillar, which is actually the environmental sustainability. It involves making responsible decisions and taking actions that are in the interest of protecting the natural world, okay, and preserving the capability of the environmental to support human life. The intergenerational argument contends that not being sustainable is unfair burden for future generation. Okay, And nature has an intrinsic values and deserve preservations. So this is actually covering environmental sustainability. And if we look at under environmental sustainability, key issue would actually be we are looking into climate change. I think these are all common issues that we actually facing right now. Okay, when we talk about climate change, this is actually basically the change in global and regional climate patterns associated with more intensive emissions of atmospheric carbon dioxide and other greenhouse gases resulting from the use of fossil fuels. The role of business in resolving challenges associated with climate change is critical, and this involved but is not limited to a detailed review of a business processes. And we have waste here. Waste, this is actually basically a byproduct of production that cannot be reprocessed, recovered, or purified. As global commercial activities escalates, more waste is produced and discarded or released into the environment in a manner that can cause harmful change. And then we also have pollution here. When you talk about pollution, this is actually whereby businesses create pollutions when production processes lead to the introductions of substances or contaminants into the natural environment that can cause harmful effects. And the last one is actually biodiversity, which refer to the variety of life on Earth. And it is the variety within and between all species of plant, animals, and microorganisms and the ecosystem within which they live and interact. Okay? And when you talk about these are all the key issues when you talk about environmental sustainability. Okay. The second pillar is actually social sustainability. So when we talk about social sustainability, this is actually the ability of a system to continue to function at a reasonable level of social well-being. So a business is socially sustainable when its activity not only meet the needs of its current stakeholders, but also support the ability of future generations to maintain healthy communities. Okay, because when we talk about sustainability, I think the three pillars would actually be addressing the future generations. So we can't actually compromise future generation interests in all the business strategies or plans. Okay, and socially sustainable business activities may include maintaining mutual beneficial relationship with stakeholders. Okay, among the key issues when we talk about social sustainability would actually be the first one is actually child labor. So child labor, basically the employment of children in business or industry is illegal in most part of the world. I think in Malaysia also is actually illegal. But yet it remains a widespread practice, and with an estimated 250 million child laborers worldwide. And then it often places children at risk of harm and interrupts their education. And this is actually whereby World Vision argues child labor deprive children of their childhood, their potential, and their dignity. The second key issues would actually be ethical trading, which includes operating in market with integrity and legality. And ethical trading practices may also include corruptions, anti-competitive behavior, bribery, aggressive or predatory pricing, unethical marketing, or unfair uses of power in market. And the last key issue would actually be supply chain management, whereby many corporations and business, particularly multinational, have extensive complex supply chains for the products they manufacture. These are increasing demand for corporations to be more accountable, not only for their own activities, but also for those of companies that supply raw material or product to them. And we can actually see there's quite a number of disasters happening globally. even though it is not at their business activities, but it is actually referring to their counterpart who are actually supplying product or raw material to the company or to the organization. So social sustainability is not just a global issue, it also relates to local community. The third pillar is actually economic sustainability. So when we talk about economic sustainability, this is actually the economic sustainability which concern with business impact on the economic conditions of its stakeholders and economic system at local and national global level, using available resources to the business best advantage so that it can continue to function and provide long-term benefit. Economic stability is really important as we live in a market-based capitalistic society. And then it is also important for business or companies or organization to remain economically viable and vibrant. And some of the key issue when we talk about economic sustainability would actually be, we have the long-term viability of businesses. This is actually whereby business reporting and financial system are geared more towards short term. Okay. And this potentially leads to myopic decision making and an institutionalized failure to manage businesses for the longer term or long-term perspective. And this argument has generated demand for more attention to be paid to the performance and activities of businesses in the long term. The second key economic issues would actually be the stability of economic system, whereby we have seen a global financial crisis like other economic crises before it. It shows how complex and interconnected our economic system are. And further, economic systems are an integral part of human communities, and breakdowns can have widespread consequences. And corporate behavior can play a large role in creating a stable economic system. And the last issue would actually be transparency, which refers to openness and authenticity about a corporation's operations and strategy. Economic sustainability can be affected by many different factors. Transparency allows external stakeholders to appreciate the exposure of corporations to risk. So that would actually be the key economic sustainable issue. And next, or moving on, would actually be linking those three pillars: environmental, economics, and social sustainability. Looking into the diagram, which is on the slide, you can see that those three pillars are supporting the agenda or the aspirations of sustainability. So it is important to jointly consider the three aspects of sustainability, and these three pillars are necessary to achieve sustainable development. And most common use guideline for sustainability reporting, company normally refer to GRI, or even they would actually be referring to triple bottom lines, which addressing the 3P. The 3P would actually be for social, would actually be people, economic would actually be profit, environment would actually be referring to planet. That is actually the 3P. People, profit, and also planet. So in sustainability reporting, company or businesses can actually be, reporting those three segment or those three factors. Okay. Okay, moving on. This is actually after we talk about sustainability and what are the three pillars and what are the issues and challenges in each of the pillars. Now we are actually looking into how board of directors or the top management of a corporations or company responsible for sustainability, and what are the initiatives that they need or have to actually engage. Okay. There is a growing recognition that boards and those in charge of organizations or business or company have an increased responsibility for taking into consideration broader factors that are beyond financial profit and performance. Okay, and it has actually been highlighted by, I think, many of the Westerners scholars, pointing out the importance of broadening the factors in business activities and strategies, and addressing the three pillars which we have actually mentioning just now. Okay, and it is argued that leaders of organizations have ethical responsibility to create a sustainable society. Okay, and that there is a business case for operating in an environmentally and socially sustainable manners. I think this is actually the expectations of stakeholders toward business, and business leaders will need to actually, creating sustainable society, and they will need to ensure that their business operation is actually addressing or operating in an environmentally and socially sustainable manners. Okay, and there is a growing demand for a broad range of stakeholders for organization to better manage the entity's consumptions of natural resources and formally incorporate environmental, social, and governance factors in risk assessment process. Okay, as I mentioned just now, previously in the slide, I did actually mention about externalities. And those externalities, I think, is still lacking for businesses, I think, in Malaysia to actually be considered and include as part of the business, cost or cost of their product or services. Okay. Company management faces the organizational challenges of simultaneously trying to manage environmental and social performance for the benefit of the community while maintaining financial performance for shareholders. So I agree when the statement saying that, engaging with sustainable initiative, the top management or the management of the company will need to actually, balance between addressing and managing the environmental and social performance, giving benefit and creating value for their community, with maintaining financial performance of the business in giving back or return a good return to their shareholders, which is really important. Okay, and then there is an evidence when you talk about board responsibility of a positive relationship between a business credibility on sustainability issues and its ability to win and retain customers. Okay, and we can see there is a link between a focus on sustainability and increase competitive advantage through innovations and new products, and the business ability to attract and motivate and also retain their staff or their human capital. Okay, and business also likely to manage risk better if it has a conscious focus on sustainability risks and to reap the reward of direct cost reductions through operational efficiencies and avoiding waste, travel, and regulatory costs. Okay, and then the increase in business profitability and ability to manage risk will benefit the business reputations and brand, including its license to operate and its ability to raise external funds. And this is actually where, as I mentioned, how creations of sustainable revenue can actually be materialized. Okay. In addition, some companies' managers are voluntarily adopting new reporting practices in response to the desire for better information for a wider range of stakeholders. I think that's all from me. Thank you very much for listening.
Thank you, Dr. Aida, for the presentation. Now we are open for any participants that have questions, please feel free to unmute yourself to ask your questions, or you may type in your questions in the chat box. I will read them for you. Okay, so Dr. Aida, first and foremost, I think I may start the first questions. So what do you think, what ways do board should or can balance the interests of shareholders with the need to protect and enhance the corporation's value in the long term?
How board, come again the question, board, how board?
Can or should balance the interests of the shareholders with the need to protect and enhance the corporation's value in the long term.
Okay, when we talk about sustainability, I'm answering Nor Alisa Nabiha question. Betul ke? Ke bukan? Okay,
Yes.
saya nampak nama kat situ. Okay, okay. When we talk about sustainability, as I mentioned just now, there's actually 3 pillars. Okay, we have the economic pillars, which is actually relating to profit. And then we have the people pillars, which is actually referring to social. And the last one is actually planet, which is the environment or element. Okay, as much as we know that business aim is actually to make as much profit as possible, which is actually being mentioned by one of the scholar, Milton Friedman. But again, in order for you to be able to get that social license to operate, okay, you are actually being pressured to address the 2 pillars. Because when we talk about economic, we are talking about profit. But that 2 pillars, which is actually environment and social, those are the 2 pillars. If you want to survive, if you want to actually sustain in business, you have to also uphold and address and drive that 2 pillars. Because sustainable agenda in business, it can't have only 1 pillars. If you look at research that has been done or articles talking about sustainable of a business and how business can actually, maintain competitive and so on, they have to actually address that 3 pillars. So when we talk about board of directors, motivations to actually maintain and addressing the business sustainability, I mentioned just now, they need to actually be very creative and they need to actually be very innovative to be able to balance between profit generated, which is actually addressing the economic part, profit, with the 2 other pillars. Because there are a lot of example of corporation that collapse due to they fail to actually addressing that 2 other pillars. So that's why it's really important. I would say board of directors will need to actually have that absorptive capacity. Absorptive capacity in governance would actually be, they need to actually be agile, they need to actually be very flexible and know their priorities, and to make sure that whatever strategies or whatever investment that they would actually engage, that 3 pillars will always need to actually be part of their consideration. And I'm actually answering Alisa's question.
Yes.
Any other question?
Okay, so I just read some questions from the chat box. How
Okay.
has the traditional reporting in financial reports evolved over time? And what are the criticisms of this traditional reporting in terms of their scope and their ability to reveal an organization's broader impact on the community and natural environment?
Okay. So I would actually capture the point here is actually looking into the traditional financial reporting. Okay.
Yes, correct.
And then how it actually evolved and how it actually, what are the things which is actually being reported. Okay. This is actually a lot of things which is actually being debated. It is not something which is actually resolved, but it is still being debated, where traditional reporting is actually, the scope is actually narrow. And if we can notice through time, because of this criticize made by stakeholders and so on, we can see the evolutions of traditional reporting, whereby if you notice in the business or companies annual report, they have started having the corporate governance sections, they have the sustainability reporting sections. This is actually, some evidence that we can see that how companies actually be agile and addressing the pressure given to them in terms of information that they need to actually report to the public or to the stakeholders. But again, there are still room for improvement, even though they are actually, evolve, and we can see there's a lot of improvement if we can compare the financial reporting or the annual report presented by companies, maybe in 10 or 20 years back, we see the improvement, but again, company cannot actually say that it's actually done, it's actually okay. They need to actually, further improve, especially when you talk about, I mentioned just now about externalities. Those factors is actually, from my observation, company actually failed to actually capture it thoroughly, and which resulted kepada, as I mentioned just now, the cost of the product or services offered by the business may actually be overstated or understated. And again, in terms of, sustainable agenda, companies may also want to actually, addressing, for example, future generation interests as part of their reporting, because most of reporting would actually be addressing the current stakeholders and also the current investors. Because talking about sustainability, future generation interests and their well-being are actually part of sustainable agenda. Am I answering the question?
Okay. Yeah, so I guess the organizations now, the enhancement of their reporting has provided a more comprehensive view and whatnot. But just a follow-up questions, what are the standard or guidelines that you think should be followed by all these organizations? Because just now you said that some of the organizations understated or overstated things. So what do you think should be the standard, like guidelines for these companies to follow?
Okay, talking about reporting, especially, for example, integrated reporting, GRI, those are some of the guideline CSR reporting. So I'm giving you some example of reporting which companies or businesses actually engage right now. Bear in mind, those reporting is actually voluntary. Okay, there's actually no mandatory requirement being forced to companies. But again, I did actually mention the reporting of CSR or the reporting of these, sustainable initiative and strategies are now required by stakeholders towards company. So last time, because it's actually voluntary, last time we thought it is actually desired. Okay, and company would actually think because it is not mandatory, so it depends whether they want to actually allocate a certain resources in order to come up with the reporting. But throughout time, you can see the pressure from stakeholders or the public. They actually required company to do the reporting, even though it is actually voluntary. So these are some of the pressure given to companies, and I would say it would actually be, for me, a motivation for company to actually engage with this reporting. And the way they actually do the reporting, they might actually use the contoh tadi GRI dan sebagainya, but I would say the three pillars or the three segment of sustainability would actually be given some guidance for company to actually do their reporting. First one is actually economy on profitability, and then social, which is actually the people part, and also environment, which is actually planet. So I think most of companies right now who claim they are actually a green company or socially involved with those initiatives, this is actually how they actually do their reporting.
Okay, thank you,
Alisa?
Dr. Etta.
Okay.
Okay, moving on to the next question. How to ensure economic sustainability by effectively managing the financial consequences if increased risk within their ESG-driven business models, and what measures can they take to maintain profitability?
Panjangnya soalan dia. This is saya nak capture. This is actually whereby macam mana tadi? How?
How to ensure the economic sustainability by effectively managing the financial consequences if,
Oh.
let's say, there are increased risks within ESG-driven business models.
Okay, when we talk about CSR just now, okay, and when we actually dive through CSR initiative and so on, it actually automatically link to risk management. Okay, because when you talk about, addressing environment, when you talk about addressing the local community or the people where you actually do your business, definitely you are actually incorporating those elements, and it comes with the risk from, environment or social. And if company or if the board of directors are able to actually incorporate the element of social as well as environment in their strategies, in their, maybe vision or mission, automatically those risks are included as part of their risk management model in their company. And if those element, that two element, environment and also social element or factors has included, I think it would actually be followed through with, getting social license to operate, getting the support from the stakeholder, and having the support from the stakeholder is actually one of the important factors for any company or any organization to survive and to maintain competitive. So if they can actually survive, if they can actually maintain competitive compared to their competitors, economic performance or financial performance would actually be translated. You maintain and you take care of, the environment, you actually address the interests of the people or the society, and you get the license to operate. Definitely you will be able to make profit, you will be able to sustain and maintain competitive. I think that, am I answering the question?
Yes. And I guess the next question is almost similar to that. Because because they were asking about the tarnishing brand and reputation risk and how it can influence the ability of companies to create a sustainable revenue. So I guess you have addressed this question as well.
Yeah.
So okay, let's go to the next question. The prospect of increased risk, higher insurance and financing costs due to environmental factors underscores the importance of risk management within ESG context. So what role does effective risk management play in creating optimal ESG-driven business models?
The role of the risk?
The risk management. I guess you have mentioned this one as well just now.
Yeah, risk management. Okay. Okay, when we talk about, because when we talk about risk, in our current business or in our current capital market, previously maybe risk may actually only focus on, towards, economic perspective. But if we are looking from ESG context or perspective, looking into, cost of capital or insurance, for example. If your company or your organization manage to actually address those risks, especially risks which is not only, focusing in terms of business activity, but risks which related to, environment as well as social risks, I think it would actually be translated in terms of you are actually having a good reputation. Good reputation would actually be related to trust, trust. And this trust is actually related to, public or stakeholders towards your corporation. People trust you. The insurance company trusts you because you are responsible corporation or company. The bank or financial institution trusts you because you are actually addressing all those three pillars. Okay. And when they have the trust, because of that good reputation, you would actually be looking into getting, a very good rate in terms of, capital that you will actually be getting from financial or institution or banking sectors. And when we talk about, insurance premium, which you need to pay. So if you are actually being grouped or being classified as a very sustainable punya company ataupun green company, addressing all the three pillars too, you would actually be paying a lower insurance premium. Those are the things, basically, how you actually relate to risk management, which associated with ESG context, and how it actually benefit the corporation or company in terms of, for example, insurance premium lower, the cost of your capital would actually be lower because you will actually be getting a special rate, for example, from the bank. So those are the things when we talk about, risk, ESG, and how it relates to, for example, insurance premium and also cost of capital for a business or a company.
Okay, thank you for the explanation, Dr. Aida. Maybe we can have one last questions from the floor. If anyone would like to unmute your mic, please do so. Oh, I guess just ask another question. The last one, I guess. Okay. Just now you mentioned that there are 250 million child labor. So it's quite surprising, honestly. But what do you think, what are the cultural and societal factors that influence this child labor?
The cultural and social.
Yeah, the social factors.
Okay, when we talk about child labor, this is actually part of social issues, social sustainability issues just now. And it is quite surprising when we have the figure. We have about 250 millions of child labor globally, worldwide. And we notice that from my observation, reading, literature and so on, I can actually see that most of this child labor are actually located in the third world country or in developing country. Okay, so talking about social and cultural, practices and how it actually influence the practice of child labor, I think the government would actually need to actually be part of uh, the the solution to this issue. For Malaysia, we know that our perlembagaan, okay, actually stated that every children in Malaysia have the rights to get educations. So from there, we can see that the involvement of our government in addressing, which relate to child labor. So maybe that's actually, cases, but it's actually isolated cases whereby we have child labor in Malaysia. Tak adalah saya cakap tak ada langsung. Mungkin ada yang terpinggir ke dan sebagainya, but that's not our culture. And we can see that in our society, if there is any children who are not actually attending school dan sebagainya, we actually naturally we know we need to actually report those cases, okay, kepada jabatan ke dan sebagainya, jabatan pendidikan dan sebagainya. So we can see this is actually how, government actually play their role in actually, educating the mindset of their people and in addressing the importance of education to children. So if everyone agree that education for children is actually a must, it is not like voluntary punya approach, it is actually mandatory for everyone, for every children to actually attend school. I think it would actually be translated into there is no child labor. Okay, but we can see, for example, there's a few cases. If I would actually tunjuk macam Nike ataupun there's a lot of super brand from US actually have their business change in developing or in third world country, for example, in India, in Bangladesh. And in that country, child labor is actually common. Okay. This is actually being written in many papers, artikel dan sebagainya. That's why lah kita nampak when we talk about sustainable punya initiative, we are also actually talking about your business change. You can't actually, that falls under economy just now. Betul tak? Yang saya mention tadi tu. We talk about the business change. So if you want to actually claim yourself as addressing sustainable punya agenda, you have to make sure that your business change also uphold those, sustainable punya factors. Okay, it is not like in US you have no child labor, but you are getting your raw material or your finished good from Bangladesh, and Bangladesh actually, practice very, very drastic child labor. I think starting from 7 years old, they are working in a factory that producing clothes. Kadang-kadang kita tengok clothes tu yang memang brand yang agak popular, contohnya Guess dan sebagainya. So that's why when you talk about sustainable punya agenda, it falls under social sustainability. Business would need to actually look into their supply chain management. And they have to make sure that in their supply chain management, there is no violations of sustainable punya agenda ataupun practices.
Okay, thank you, Dr. Aida, for the explanations and the presentations. Okay, so I guess that's all for this session. Okay, moving on to the next session. We have now with us Encik Muzil Khairat from Legal Night Consultancy, and he is a seasoned legal and compliance professional with over 15 years of experience. He holds various qualifications, including a certified governance, risk management, and compliance professional certification, an LL.M and a Wharton Business and Law certificate. And throughout his career, Muzil has held key positions in global, regional, and country leadership roles. He notably transformed the risk and compliance program at Hoover in Hong Kong, revamped compliance efforts at AIA, and managed anti-bribery and corruption initiative at HSBC in the Asia Pacific region. And he also oversaw compliance at Halliburton in the APAC, Middle East, and MENA regions, working on preventing competition law violations at Technip FMC, and played a vital role in establishing Petronas' first global ethics and compliance program. So Encik Muzil's expertise spans various aspects of compliance and ethics in multinational corporations and state-owned enterprises. So without further delay, it is now my pleasure to invite Encik Muzil for his presentation. The floor is yours, Encik Muzil.
Hi. Can you hear me okay?
Yes, we can hear you.
Okay, one more. Share my screen. Can you confirm that you can see my screen?
Screen. Yes, we can see.
Okay. There seems to be an echo, but I think you're manageable. Okay, it's fine. So Assalamualaikum and good morning, everyone. Thank you for attending this session, and I am privileged to be invited to give such a I would say such a talk that is quite relevant these days. And we've heard today especially from Dr. Aida, who spoke about incorporating ESG, which to me is an insight, in a view of insight, looking out dari dalam, tengok keluar, because you're trying to incorporate ESG in your business practice. But now, my role is trying to brief on how we can see ESG and ethics compliance, which is technically culture of integrity, from outside looking in. That means kita dari luar, kita tengok orang kat dalam, which is how I see this conversation is going to be lah. Okay. The objective of my presentation today is, at least these are some things that I want to achieve lah. So we try to understand why integrating ESG considerations is important for building a culture of integrity and ethics. Be able to identify key ESG risks and issues that may impact investment decisions from a compliance perspective. Know some practical steps you can take to promote ethical behavior and foster an ESG aligned culture in your work. Recognize the role of securities professionals, for example, in advocating for improved ESG performance of companies. Number 4 is very important, I think. And also I'll try to briefly on number 5, talk about the Malaysia's efforts in Malaysia in trying to integrate ESG for the industry to support our own national sustainability goals. And I guess the end of the day is, number 6 is feel empowered to champion responsible investing approaches within your sphere of influence. Basically, number 6 is talking about doing what is right, because the culture of ethics, integrity, and compliance, in my view, as it aligns with ESG, is trying to talk about doing what is right, but trying to also think about how we can be a business partner in doing so. So the content of today, there's about 8 parts. So we're talking about ESG trends and goals. So I'm not going to go too much on that because I think everyone has had sort of a basic understanding what ESG is, but I try to align that from ethics and compliance worldview. And then we talk about the foundation of ethics and compliance. It's like 1 or 2 slides on this one because it's not a lot of conversation on this, and I will tell you why. And then we talk about aligning that with ESG, talk about case studies and the benefits of ESG, but focusing from a Malaysian perspective, especially the IESG framework. We're talking about ESG, which is a balancing act. People talk about trying to comply, doing what is right, for the environment, for the society, for the governance, but people don't think about that is how difficult it is to do it. And number 7 is the core focus of this conversation, which is how do we apply the culture of integrity and aligning ESG for business, because we can't just say, okay, incorporating ESG or ethics and compliance, doing what is right, but how then business make money, in such a as a regulation and the public moral change and expectations as well. And we talk about conclusion. Generally, ESG goals and trends. I don't know if people talk about this in the beginning, but the term ESG was first used in 2005 in a landmark study published by the United Nations Global Compact. And then the launch of the United Nations Principles for Responsible Investment in 2006, which I believe Dr. Aida made reference just now. They formally established ESG as a framework for evaluating the sustainability and ethical impact of investments. And because the ESG concept gained further momentum later on when the UN introduces the SDG, so which addresses many ESG-related issues. So the SDG, and most of you must have heard, and all of you, I'm sure, must have also heard, there's about 17 goals that they have to achieve, I believe, by 2030, which covered the entire gamut of the ES and G pillars. And we have also, that's the push, that's more like the history from a international community, but also from the private side, we also have institutional investors like BlackRock and Vanguard, who own some of the BlackRock being the largest asset management company in the world. Vanguard followed Vanguard, BlackRock. So they sort of, I would say, from the private side, they sort of pioneer sort of ESG focused outlook, and I will talk about it in later slides. And as you know, ESG, we talk. I'm sure we've gone through this, but ES and G, environment, talk about climate change, carbon emission, pollution, biodiversity, national resource usage. Social relates to human rights, labor practices, community impacts, customer welfare, data privacy, and a lot more. And governance generally relate to things that are happening inside the company. Which executive pay, diversity doesn't relate to only board. We're only thinking about hiring practices, anti-corruption and accountability, and it also relates to like whistleblowing practices and those other things. Let's see. And this is actually relevant, although this is very quite straightforward, right? Growing stakeholder expectations around ESG performance. Investors, they really care about ESG performance into making investment decisions. Customers and clients concerned about supply chain ethics and sustainability, for example. And from a company perspective, you look at company reviews on Glassdoor, for example. Glassdoor being a huge repository of not only job finding a website, but also where employees, current and former employees, they post reviews about companies, and they give some star rating, and you can there are comments there, right? They won't say ESG, but they will say, hey, this X company that I used to work for and currently working for, they, many people give like reviews, and usually it's anonymous, and they will say this company use children as labor, or they don't have paternity leave for young fathers, right? Or they have very short maternity leave for young mothers or for mothers, or maybe their health and safety practices is really bad. They don't have mental health support. So those are some of the things that employees are now thinking, and when they do a company review before starting a job there. And activists and NGOs pressuring companies on ESG practices. So a lot of people think that activists and NGOs don't actually bring value, but they actually do, because there have been instances in the past where mobilized public opinion on global wrongdoings have changed the entire way of international community doing things. An example is the treaty called Ottawa Treaty, Ottawa being the place, a province in Canada, which is a treaty on prohibiting the use and stockpiling of anti-personnel landmines. Most governments back before 1997, they were still using landmines to deter enemy personnel from entering or trying to attack the enemy when they invade the country or things like that. But a lot of people who suffered from those landmines when the war ended were mostly civilians. So that treaty was actually pushed by NGOs through an international campaign. International campaign to ban landmines called ICBL. So that's an example where activists and NGOs they mobilized and actually made a change, where a treaty was signed by members of the UN, most of them, except of course the US and Israel, for example. So they don't sign it, but it is just to show that how morality can actually push change, right? And regulators introducing more ESG-related disclosure requirements. So just now, one of the questions, Dr. Aida, was related to reporting standards, right? Guidelines. So there's this reporting standard, I think, the Dow Jones Sustainability Index. So any company that is going to be listed on Dow Jones, for example, they have to follow a certain standard to disclose their ESG-related activity. So the activity that relate to the ESG metrics. So it's ESG ties to business ethics and integrity, right? So ESG definitely helps in addressing risks like human rights abuses and corruption, because a program that addresses all the three pillars will help the company to identify from a risk management perspective and prevent or mitigate issues if they have specific risk related to all the three pillars, right? So you can think about, like, as Dr. Aida mentioned, supply chain management. So we look into the supply chain oversight. Are there child labor involved? How do you reduce waste? So how do you mitigate risk on waste handling management, right? So yeah, hazardous waste, how do you dispose of them, right? What's a whistleblowing practice, right? So those pillars, although generally you don't think companies don't have ESG policy. There's no policy or document called ESG policy, right? They might have a sustainability statement, sustainability report, but the pillars are embedded in how the company practice their day-to-day activity in a code of conduct and things like that. And a strong ESG oversight builds trust, integrity with stakeholders. So stakeholders here not necessarily mean shareholders. Stakeholders can also mean your customers. It can also mean your employees. It can also mean your vendors, and other people who are related to your company. So they want more transparency, right? So the more the company does the right thing, then the more stakeholder want to be part of that company journey, right? So that's how it is tied to be doing the right culture of integrity. And poor ESG practices includes legal, regulatory, financial risk. We'll look at this in some of the case studies. And integrating ESG into compliance promotes cultural values. So, when you integrate these pillars in your compliance program, for example, it doesn't have to be compliance program, just a general company practice. Then people want to, you have a good whistleblowing policy. Then people want to speak up more, right? Or maybe people are more willing to do more for the company because they see, oh, the company is helping people during bad times. The company is investing in in promoting good practices in developing countries, right? They're helping people who have just they gave some type of special leave for people who have suffered death in their family. Instead of 2 or 3 day leave, they get one 30-day leave, whatever. So people would love to do those kind of things for that company, because they know the company is moving in the right direction, at least according to their moral standards. Example of companies embracing positive trends. We don't have to go through too many of here. So Unilever and Patagonia, one of them. Patagonia actually made news, I think last year or something last year or early this year, where the founder Yvon Chouinard, he forfeited ownership of the company. So he founded the company and he forfeited the ownership. He made the Patagonia into a trust. So the trust, all the profit that the company will gain will be used to fight climate change, right? So I think that's an example of how they actually put the walk the talk, right? And then in terms of Unilever, they actually have a good, strong supply chain auditing and oversight. So they actually have so it's one of the very few, more and more companies that are hiring what they call a supply chains compliance auditor. So what they do is, if someone that used to work in supply chain or someone used to work in my area of work, which is ethics and compliance, then they will want to hire these kind of people to see if their supply chain practices is meeting the 3 pillars of ESG, for example, depending on which reporting standards or guidelines that they follow. And some of the examples in Microsoft and BlackRock. So Microsoft, for example, they have all these investments going on, but the point number 4 is going to be relevant to our endpoint, which is how we do it, how we relate to business. So Microsoft was in the point number 4. It says they're pressured by employees to end ICE contract over human rights concerns. So ICE in the US is the immigration department of the US. So what happened was, Microsoft actually was allegedly they of course, like most governments in the world, they use Microsoft Windows, they use Microsoft Word, for example, the software suite. And what the allegation was, Microsoft partnered with the immigration department to actually install facial recognition and data and AI to actually recognize if you are an illegal immigrant, especially in the south part of the United States of America, where there are a lot of issues with illegal immigration. And what one of the allegation was that the software used by Microsoft identifies children and with the parent, and they would separate children from parents from those countries. And a lot of times where children will be held in facilities in the US, in New Mexico, for example, and the parents will be deported. So that became an issue, and they have sort of, I think, changed that program, I believe. And BlackRock, of course, they became known as the driver, especially in the diversity side, in the LGBTQIA plus move, but also in terms of setting the stage for sustainability friendly investments. So they voted against 53 companies over climate concerns in 2022. Even before 2022, they have voted especially in oil and gas companies. So sometimes BlackRock is known as an activist investor, where they actually, because they have a lot of power, they have a lot of money, a lot of influence, so they can actually influence how a company direction in terms of sustainability related investment or disclosure. And they joined Climate Action 100 Plus Invest ESG initiative, where members of that Climate Action 100 Plus are usually Fortune 500 companies. And this is how companies are trying to show or portray that they are embracing these 3 pillars. Whether or not we believe they're doing it is a different thing, but at least this is what they're trying to show to the world. So that's on the ESG side and doing the right thing stuff. So let's talk about the ethics and compliance side. Why I call it a foundation is because there are 2 parts of compliance program. So not 2 parts, there are two school of thought. One is because I've been to both. One is the financial sector side of compliance, the other side is the non-financial sector side of compliance. And for companies that are in the financial sector, compliance belongs in the second line of defense normally, and in the 3 lines of defense model. In ethics and compliance model, which is embraced by the non-financial sector, they have a different way and of view on how to run a compliance program. But at the end of the day, it talks about the same thing, right? The cycle is about the same, where we talk about this cycle that I draw here is actually trying to talk about an elements of a good compliance program. So a compliance program starts on leadership, setting tone from the top. They have clear policies and procedures. They have compliance risk assessments that they do regularly. They have training programs and reporting channels. They have proactive monitoring. They audit their program. Right? They remediate when issues arise after those audits, and then discontinue program improvement, post audit and post audit closure and things like that. So it's a cycle that goes on, and this really push, when there's an issue with the compliance program, or there's an issue with people who are not adhering to the compliance program, for example, breaches of policy, corruption, corruption being done by our employees, by the company employees, board of directors, for example, or maybe they cook their books, right, from a financial standpoint. Instead of reporting that this is a loss, they actually reported that as a profit or revenue by changing the tactics in the reporting standard, pushing things to another subsidiary and things like that. So those things happen in a lot of companies. And they breach the 3 ESG pillars, and this will be relevant when we talk about how do we assess investments or transactions to meet the 3 ESG pillars. So aligning ENC and ESG, which is what the topic of this conversation are talking about. So nothing new here. It's about, you talk about incorporate in terms of risk management, right? In terms of management, we talk about incorporate ESG factors in compliance assessments. I think Dr. Aida mentioned this several times just now. So if you know that you are going to build a factory in Bangladesh, or you are going to have a customer in China, or maybe you are going to invest in a stock that is owned by, say, the beneficial owner is actually from Russia, right? Or they may also have some investments in countries, say in the Middle East, or maybe in Israel, or maybe in the African continent. So some of the compliance risk that you need to consider from an ESG perspective is, okay, are we complying with child labor practices where there's no children involved? Are we going to be supporting a criminal despot? Are we going to give money to companies that are breaching human rights? So those are some of the things that we think about in incorporating ESG factors in compliance assessment. We will talk about at the end of the slide. We handle risks like greenwashing with robust audits. So greenwashing is a risk, right? So you might say your company is actually promoting products that are helping the environment, but it's not. So that's why we call greenwashing, right? So that you have to audit so that's why in banks or in insurance companies, they have this unit called product compliance manager, because they manage the product compliance with different types of regulations, including ESG ones. Of course, and then you do due diligence, vetting partners, customers, investment opportunities using ESG criteria. And training is, of course, the most important thing. You train staff on environmental stewardship, human rights. From an investment perspective, if you're a securities company, then your staff should know like what to look out for. when you're trying to promote a stock, you're trying to promote a bond, trying to promote a company, or trying to do an analysis on this company, or your analyst should know what to look out for. We talk about this in the end of the slide. Ensure your marketing reflects actual ESG impacts. So Deutsche Bank, we'll talk about after this, where they have been sort of penalized because of greenwashing in some of their products, and track and communicate ESG progress regularly. Into supply chain, manage social compliance through rigorous supply chain oversight. Talk about this several times already. Implement supplier codes of conduct that reflect ESG principles. If you are working for a company that provides some services, then you must be your procurement personnel should be aware that they have to sign a code of conduct that is meant specifically for suppliers, right? So in the code of conduct is going to be slightly different than the company code of conduct, because in there they will say, you declare there's no conflict of interest, you don't pay government officials or bribes, you don't hire children, you don't throw waste in the sea or pollute rivers, you don't, you have a good anti-corruption policy. So also sort of some of the things that you will see in the supplier code of conduct. So some companies do have it, some companies don't, and those companies that don't, normally they should have one. And then they have incorporate ESG performance metrics in supplier evaluation and contract. So ESG performance metrics, just like the code of conduct, then you have a KPI. They have questions like, do you have an anti-corruption policy? Do you have a whistleblowing policy? Do you engage in countries that are in this list, like Myanmar, Cuba, Syria, Sudan, Russia? So things like that. So those are the metrics that suppliers have to say yes or no, or give numbers to, and then they will see if those suppliers meet certain ratings that the company has set from a supply chain perspective. From a governance side, maintain strong governance over sustainability initiatives, create a dedicated ESG committee at the board level to oversee initiatives. Most SMEs don't have ESG committee. Actually, most companies in Malaysia don't have this, but they have like a head of sustainability in the executive management team. But some of the companies, bigger companies in the West, they actually have an ESG committee that looks specifically at initiatives to address ESG related risks. And of course, regularly review and update governance policies to reflect or evolving ESG standards and regulations. So thinking about case studies, this is more like environment side. So Goldman Sachs was criticized for its role in a $2.7 billion bond issuance by Indonesian state-owned company, which claimed to be environmentally friendly. What happened was Goldman Sachs was trying to promote like I think it was a bond for Indonesian state-owned kelapa sawit, company kelapa sawit. But of course, as you know, palm oil company, they deforest, right? So they would destroy huge swaths of land to build to plant palm oil. So palm oil is not a carbon positive tree, right? So when that happened, so you cannot say, oh, just because you're planting some form of tree, right, converting land into palm oil plantation, it does not mean it's going to be green. So they were fined $2.7 billion. I think it was in the US. So they had to underwrite some of this money. In Singapore, it's more of a green washing as well, where a director was charged because they're trying to get the green mark certification from one of their buildings, but he submitted a false information to the authority. So he was personally liable for that case, but the company called KTS Construction, they were also punished for this. And Deutsche Bank, of course, I mentioned just now, they were called out by groups in public for their climate policy. They claim was fake and lack commitments to phase out financing for fossil fuel, because they say they want to commit to net zero goals, but a lot of their investments are still in oil and gas companies and oil and gas contractors all over the world. So that sort of undermine their own ESG related investment promises. So think about there's one case that I would like to go through, like how a company can have an impact on all the three pillars, right? So Evergrande. So for those of you who may not be aware, so Evergrande is a conglomerate from China. They do a lot of things, chief among which is commercial real estate construction. So they build buildings all over China. They have a lot of contracts with the Chinese government. So they have a debt crisis right now because they couldn't pay their debt of in the 3-digit billion. So most companies' debt are like few million or 30 million, but Evergrande debt is about 300 billion, if I'm not mistaken, which is almost like the size of a country. So I may get that number wrong, but it's very high, and they may not be able to pay it. So what happened was, so this is the issues. But what happened was, this also related to the Chinese government, because the Chinese government had actually misreported their population number. So they say that there's going to be an increase based on the trends and also birth rate, that the Chinese population is actually 100 million people more. So as a company, you know that there's going to be demand, so you start to build houses, right? You start to build properties everywhere that they can. And because of it, in China, a lot of people, they move to major cities, to big cities to find jobs. So Evergrande built properties all over the big cities in China. And what happened was, this reporting by China was thought to be wrong. So this 100 million over people, when it's not there, right? So then they had a problem because they had too much leverage in this construction deals, but no buyer, no one is buying those properties. So there's a huge issue, right? Aside from relying on the government statistics, they also did not have a proper risk management appetite as a company, right? So, but when they were promoting those properties, they say that they can pay. They say that they use like very specific environmental friendly practices, and they made a lot of promises. So, from a governance perspective, it highlights an issue with good corporate governance, because there were reports suggest that Evergrande's risk management, financial transparency, and decision making process were really not up to mark, leading to the accumulation of unsustainable debt levels, right? And a social issue is so a lot of home buyers who bought the property, they, because let's say in an area there's only a few people who bought the property, and then it's not sustainable for Evergrande to maintain the property, so now they don't have a home, but they still have to pay a debt because that property is not completed, right? So, and there are issues in terms of how the supply chain going to sustain such massive construction projects all over the country, right? And then from an environmental perspective, if you see in videos on YouTube, you can go on and you can see there's many videos of just apartment blocks and buildings being torn down by demolition in China, and most of those are actually owned by Evergrande, because they could not sustain those buildings, so they had to like really massive demolition activities going on, because they had to write off those properties. So there's a lot of environmental issue, not only from the post-construction, but also pre-construction, and how you actually try to make sure that the construction projects are being delivered on time in such a massive scale. And then ethics of compliance, of course, there's a breach of ethical standards of compliance where they misled investors about its financial health, right? So that's a huge issue. And of course, you talk about risk management, where this debt crisis shows the potential consequence of failing to properly manage financial and operational risk, especially in a company where your business has a lot to do with all the 3 ESG pillars, which I don't think they actually manage those risks properly. So think about benefits of ESG. I'm only going to focus on the Malaysian perspective because I think it makes sense. Everyone has talked about why ESG is important, but let's talk about it from a Malaysian perspective. So it became critical to access financing, right? So as Dr. Aida mentioned just now, as relates to people getting lower capital costs, and I think the Tengku Zafrul and I think Maida they have mentioned that companies going forward may face, I think this was a report last week, where companies may face issues with getting loans if they don't meet ESG standards in Malaysia. So that's I think going to be a huge ask for a lot of companies in Malaysia. And then, companies that embrace ESG can tap into the massive $12 trillion fund. Globally, they can allow Malaysian companies to remain competitive in global ESG sensitive supply chains, necessary for import stringent market to the EU. So the EU, for example, they have two laws. That's one regulation just came into power this year. Two regulation, the other one has been enforced but going to come into force. It's been gazetted but come into force 2025. Which one of it is about carbon tax import. So all companies should trying to do business in the EU. If you meet certain criteria, then you need to do an assessment in terms of how much of your business is actually cost in terms of carbon footprint. So that when you do business in the EU, then there's a number of carbon that you bring into the EU through your supply chain, then the EU will impose tax on you based on that number, right? And unless you have that disclosure, you either be fined or you cannot do business in the EU, for example. The other one in 2025 is called the due diligence, sustainable due diligence disclosure requirement, where companies meeting certain thresholds will have to start thinking about conducting internal and external due diligence in terms of how your company sustainability practices. So, for example, internally, there's an expectation where you have to look into all your employees, your vendors, and your buildings, your cars, your travel schedule, and things like that. How much are they contributing? How much are they contributing, right? Those questions like, how much are we flying? How much our executives are flying, over the world this year? How much of our vendors are actually in developing countries? How much our vendors are actually practicing in high risk industrial waste exposed, like if you invest in nickel trading, cobalt trading, or rare earth purchasing, right? So those are some of the things that you have to ask internally. Externally, when you do due diligence or know your customer activity, then there's an expectation where you have to add those same questionnaires internally in the external questionnaires, like, do you do this business, do you that business, do you operate here, do you operate there, how many women you have in your board, do you employ LGBTQIA plus in your company? So those are some of the questions that Malaysian companies may have to think about once they want to do business in the EU. Then SMEs especially need support in ESG to avoid being left behind. I will talk about some of the efforts being made by the Malaysian government in helping this. So the MIDA ESG fund, the Malaysian Investment Development Authority, they launched funds. They reported this last week. They have funds to support business, particularly local SMEs and mid-tier companies in meeting ESG goals. The funds aim to empower business and innovate, expand, and integrate into the evolving global supply chain. The initiative seeks to contribute to Malaysia's economic progress and upgrade industries for higher value economic activities. The funds facilitate knowledge transfer for foreign investors, domestic companies. MITI highlighted this, Tengku Zarful, as you said, this, the importance of nurturing local talent, fostering partnership, promoting investment for sustainable economic growth through this fund. So the goal is for the country to be a leading player in the global industry landscape and beyond. I think some of the this is to address, because some we have companies like, for example, Sime Darby and Felda that were some of the palm oil products have been blocked from entering the EU because there's an allegation that Malaysia, these companies, right, Felda and Sime Darby in the palm oil plantation, they employ foreign laborers from Bangladesh, for example, but not only do we pay them below minimum wage, but the treatment for them is, according to the EU audit, is not following human rights practices. So those are some of the things that I think some of this fund is trying to address, right? To try to so that we can compete competitively in the global stage. And then we have the National IESG Framework. I think it's like a several hundred page document But generally, that document is like a roadmap to integrate ESG, especially into manufacturing sector, because that is to say that the manufacturing sector has a highest risk from an ESG risk side. And then they have a phase approach in the framework, right? They have this just transition phase because they want to make sure that companies are ready to climb the ESG ladder by 2026. And then phase two, the next 4 years, 2026 and 2030, 27 to 30, is going to be accelerating ESG practices so that the companies in Malaysia is just the same as the other companies in the, I guess, in the West or globally in terms of practicing ESG. The ESG framework has 4 pillars. The initial focus is just transition. They have tools like, in the cloud, which is ESG ready, ESG start, so that, as you mentioned, that internally you need to do ESG due diligence, ESG assessment. So the government is helping that with those tools instead of you starting from scratch. I think the government agencies are doing outreach program now is for, I think, state-owned banks and some of the banks across Malaysia. And they have all this program like clinics and mentorship to help companies generate sustainability reports, just like how a company does with a lot of companies and public sector companies in Malaysia may not have sustainability reports that is geared towards meeting international standards. Most companies do it voluntarily, as Dr. Aida has mentioned. But I think the idea is that we're going to have a more robust template of sustainability report on what is required. Bursa also came with their own CSI platform, Centralized Sustainability Intelligence. I think last week, I think OCBC Bank and Bursa and I think Northport or something like that, they partnered with Bursa. They want a few early adopters. So it is trying to be one of those platforms where public listed companies can provide data in that platform, so it's highly accessible. Right, so as it says here, it allows PLCs, public listed companies, to disclose ESG data in a standardized way, provides tool, blah, blah, blah. And instead of providing reports in paper, it's now going to be in the cloud in the form of digitalization. So this, I think, is the benefits of really embracing ESG for Malaysian companies. And it says there, TCFD adoption, TCFD reporting is one of the reporting methods, one of the guidelines or reporting methods, as someone asked Dr. Aida just now on the guidelines. So we have GRI, the Global Reporting Standard, and they have the, as I mentioned just now, Dow Jones Sustainability Index. We have SASB, I think Sustainability something board, and then TCFD is one of them. So Bursa is trying to make sure that the reporting standard, at least by public listed companies, is going to meet the global standard. So we talk about doing the right thing. We talk about ethics and compliance, talk about integrity, we talk about the benefits, talk about importance, talk about how we can integrate. So now, why do we talk about ESG, right? Why? Meaning that from a business perspective, we know that ESG is very, very difficult difficult in the sense that it's very difficult for companies to actually now balance between the evolution of the expectation of meeting ESG needs and also the business trying to make money. So in the UK, for example, the Birmingham, technically it's not utility, it's actually Birmingham City Council actually. They actually declared bankruptcy because so there were women in Birmingham who actually they deposited a case where they say, men were paid more, women were paid less, so we deserve to be paid more. And I think the court, I think it was brought to court, and I believe the Birmingham Council were asked to pay some of the women their back pay, because it was found that some of the women government employees were not paid according to fairly, at least when they compared to men. So they were asked to pay £1 billion, $1 billion, but I think about 900 million pound, and they didn't have money, so they had to declare bankruptcy. So the Birmingham City Council, they want to make money, but now they have to balance that whatever money they have with the ESG needs, which is the G side, right? The diversity side, which is the fair pay for women. So they couldn't meet that. And Rishi Sunak, they say that they are moving, delaying a ban on sale of petrol and diesel vehicles. Initially, it was supposed to be earlier, but he delayed it because there was a lobby that says, if you do this, then it's going to be very difficult for us to do business, the manufacturing side especially. So, this is where trying to balance, the environmental side and the making money side is going to be difficult. So one of the things we also see in the EU, for example, is the wind farm, right? So the EU as an entity, they have grants and subsidies for green projects like wind energy. So because at these kind of projects, they have large capital requirements and very complex. So so you need a lot of money to actually implement wind or solar projects, right? So in southeastern Europe, for example, as countries like Italy and Spain, they are very poor. So they're not like third world country poor, but they don't have a lot of people there. They're not rich. So what happened was some of the more enterprising groups like organized crime, like mafias in Italy, what they did was they would pressure landowners to sell land, so that in en masse, right? They will send land, like tracts of land, or they would buy those land using drug money or prostitution money, and then they would get grants from the EU and develop those land using that grant, right? So technically, you're washing those dirty money, right? Just technically a money laundering issue. So why I write this down here is because when I was working for HSBC in Hong Kong, I was one of the managers in the anti-bribery corruption team for Asia Pacific, and I was tasked to do a product study in Europe for the HSBC team in Europe, because the HSBC team in Europe, they were trying to seek internal independent risk assessment from the internal team. So from a financial crime compliance in Asia Pacific, so I said, you know what? Okay, my boss said, why don't you do a study on this? And I found that some of the products that the HSBC team in Europe were researching on, were trying to get into is the wind farm projects to give loans to, or to support the wind farm projects in Europe, were actually tied to organized crime. So I brought this up, and true enough, they did not. Well, I would say they did not push through, but they appreciated from my input, because a lot of people may not see it, from if you just Google or some of the names, because some of the companies are not public listed. Shell, of course, just came out, I think, last week, and also previously 2-3 years ago. They have quietly removed carbon offset target from strategy, because they don't think that's going to help them in making money, right? So they withdrew their previous commitment to spend up to 100 million US per year in net zero strategy. They have cancelled plans to generate 120 million carbon credits annually, right? Okay, the last one is more recent, right? So as we know, October 7th, we saw the Al-Aqsa flood in Israel. So Israel, I think 2 days after, they ordered the government, the energy ministry ordered Chevron to shut down the offshore natural gas field, right? Because they were the promises by the government, they're going to cut energy to Gaza. And Tamar was actually the 70% supply 70% Israeli energy, but they are actually the major natural gas source in the one of the major sources in that region, right? One of the largest, and it's quite recent. So Chevron, of course, has their own ESG goals, right? They want to help people in need. They want to supply to persecuted people, from a humanitarian perspective as well. But they cannot do it, right? They cannot meet that ESG goal because they also have to consider the government instruction. So trying to balance that, you want to help people by giving energy, or not shutting down energy, but at the same time you have to balance with instructions from government, or just needs to make sure that if you don't follow the instruction of the Israeli Energy Ministry, that something might happen to your licenses, for example. So the impact of that gas shutdown was not only to Gaza, but also to the neighboring countries like Egypt and Jordan, where they have to source gas elsewhere. So how do we apply, right, this alignment and integrity with the ESG for business? So the question is what to look out for in your transactions, right? So I drew a workflow, right, from the left. So so the idea is I want people to think, right? Okay, we think about ESG, doing the right thing, business, we want to make money. We think about integrity. We talk about alignment, talk about this, but then how do we apply it in a real life scenario, right? So think about it. That's a transaction on the left. A transaction could be you want to promote a stock, you want to engage a third-party vendor, you want to partner with a customer, right? So of course the question you ask is this transaction sustainable? Of course, the question is the answer is no, right? Based on the metrics that you've seen, then you don't have to, right? But let's say you see, okay, they have they have sustainability policy, they have green stuff, they have women in their board, they have LGBTQ in their company, they promote training they work with MACC, right, for clinics and programs, outreach programs in the kampung or things like that. So okay, they may look good, but maybe we should ask further question, right? So some of the questions, the basic one is, okay, is the investment third-party customer sanctioned by the US, first of all, by the UN, right? So sometimes these things you don't see in the report. You have to do some form of due diligence on using some tools, right? Either Google or Google may be a good one, but there are more tools that are available to financial institutions like the Dow Jones. You have other like Thomson Reuters, so they have this kind of databases of people who have been sanctioned, or maybe that company or transaction or investment, it was investigated for corruption or other crime, or they may be in negative news, right? So those are like the minimum requirements. Say if you are a bank, if you are like Bank Islam, Bank Maybank, CIMB, Public Bank, right? Yeah, Hong Leong, whatever. So there's a bank negara requirement to do this. This is fine, but then you also have to ask yourself, right? If let's say let's say they're not sanctioned, right? They're not corrupt. They're not corrupt. They're not sanctioned. They're not in negative news. They will never be investigated. They have women in their board. Blah blah blah. But are they really okay, right? Sometimes you have to also ask the questions, right? If required, from a risk-based approach. Maybe you can do a blog search, right? Or maybe you can look at Instagram or TikTok or whatever social media platform. Then try to find the company, especially if it's a big company, right? So let's see if the company is involved in supporting human rights abuses, right? So companies that are supporting human rights abuses, they may not be sanctioned, right? For example, companies that are defense companies, like the U.S. company like Raytheon, right? Aviation companies in the U.S. like you have like Boeing, you have Airbus. Airbus is French, or you have the intelligence. You have technology company like Boston Dynamics, for example. So those companies, although they don't kill people, for example, but they actually build technologies that they sell to countries that are involved in those type of activities. So and then what about if the company has been rejected by the government or international banks? Sometimes these are not reported, right? So sometimes the parliament or the congress of that country may reject the use of that company as one of their vendors for any reason. And I found this several times in one company, and surprisingly enough, this company has been paid millions of dollars around the world, but no one really knew that they actually been rejected by the EU, by some countries like Brazil and France. So I had to provide advice that do we want to use this company, despite them being okay from a sanctions and a corruption perspective. What about, I talk about just now, beneficial owner connected to despots or tyrants. So in terms of beneficial owner, so who is a beneficial owner? So a company can have someone that controls the company, but either from a parent perspective, so the company is a subsidiary, right? So Bank Islam Malaysia Securities is, for example, it might be it's 100% subsidiary of Bank Islam Berhad, for example. I'm making an assumption here. So Bank Islam Berhad is essentially and who is the majority stake shareholder in Bank Islam Berhad? And the majority shareholder, let's say it's one person owns 35% of share in Bank Islam Berhad, for example. I don't know, but that person who owns that is presumed to have control over the entire Bank Islam operations. Of course, this is subject to shareholder agreement, subject to other things, but let's say they have, this kind of majority shareholder is presumed to be the beneficial owner. But the problem in the beneficial owner in trying to ascertain here is to see if the beneficial owner is okay or not. So there are a lot of companies where the beneficial owners are actually in countries like Russia, in countries like the Middle East, in South America, and we don't know that. So there's a lot of enhanced due diligence that we need to do, right? Of course, you don't have to do it all your due diligence, but you have to need a risk-based approach. So I have seen a case where this person owns 2%, 12% in a company in China, but apparently they have a special agreement where, so the 12% is not majority, but there's a special agreement that this person has a golden share, right? So even though this person has 12%, but that golden share makes him like a very special privilege in making decisions. So we is deem that person as a beneficial owner. So we can talk about this in the next slide. What about lobbying for affairs that negatively affect others? So a company may be good and things like that, but they actually pay money, right? So an example is the tobacco industry, right? So tobacco industry may not be involved in a human rights issue or things like that, or they may be sanctioned, they're not investigated, whatever, but they actually pay for money to suppress research on the negative impact of smoking, right? Or they may be found to be promoting, a grave assumption like smoking for under 18 is okay, right? So are we okay to invest in this company or partner with them or things like that, right? So this talk about this because I'm talking about it from a compliance perspective, because I have to work on performing due diligence on third parties, due diligence on customers, due diligence on investments as well, for the investment compliance teams in my previous time. So these are some of the questions that I ask when I look at very large investments, very large third party, very large customers, because sometimes there are things that would muddle the reports or publicly available documents. So some things to look out for when analyzing investments. So besides profitability, I think Dr. Aida mentioned just now, right? Like, you need to, aside from just shareholder value, right? Aside from, the annual report, aside from code of conduct, blah, 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 what else should we look out for? In terms of ESG, right? In terms of ethics integrity, right? So because this is how it's going to be relevant, right? Because the first one I mentioned is mission. This is a slide I added. So mission, vision, and values. So a company mission, vision, or values can have some direct relation in their future. So for example, a company may not be having an issue from, like I said, sanction, corruption, human rights, whatever, but there's no news on that, but they, in their mission and vision, they say, oh, we are going to support the vision and mission of this president, right? Because it could be state-owned, or because the state has a huge investment in that company, right? Because, and that president is a president or prime minister or whatever, the head of the country has problems with human rights issues, for example. So then we ask the question, oh, if that company is supporting that vision and mission, right, are we going to be okay partnering with them, right? And so are they a good company? Then what about, and look also at locations, right? So where the companies are. So from ESG standpoint, especially the S part and human rights violation, communities right, like corruption. So some companies are okay, whatever they say, but suddenly they are operating in places like Syria, Sudan, or Israel, right, or Myanmar, so or Ukraine or whatever, right? So when you see those and you compare their sustainability report, you look at your annual report and you see, oh, okay, you say you work here, but do you say like how much have you done to not be involved in some of the atrocities in those countries, right? Because it's very common that they have to give some investments in that country that may escalate or prolong some form of human rights issue in that country, right? It's very difficult to avoid. Control, we talk about control, beneficial ownership, but we also think about when you look at a company, when you analyze a company, you look at the annual report, you also look at their list of directors. So sometimes a company may not have a majority stake in the form of share in the company, but out of 12 or 13 directors, 10 came from that company, 9 came from that company. So that means they have control in terms of what the board decides, right? So the board, of course, decides a lot of things. Right? They decide where the company is going to steer the company's objectives. They decide who are the key management executives in the company. They decide where the company is going to invest, what it doesn't invest in, the policies, they approve policies. So by having that many number of directors in the board, then you see, oh, okay, then and then you see, okay, they have control, and then they say that they do this, they do that, then you need to start asking questions if this company is actually independent when they make some sort of ESG type or integrity type disclosure, right? And then who are their major customers, right? So let's say their company is big, and then their major customer is a state-owned company or a country that is involved in various human rights abuse, right? So maybe their customers are family members, owned by family members of a head of state that's involved in human rights abuse. So those are some of the questions that we can ask, right, from ESG perspective and integrity perspective, right? So they are okay, whatever, but you found that they have some connections to certain third parties or whatever, so contracts or other news, then you need to ask yourself, are we okay to be part of that journey of this company? And then we have also policies, right? So look at what policies we have, especially public listed companies, very easy to find, but of course, non-public listed is going to be a bit more difficult to find policies because the policies will tell you what the company is like, publicly available policies, right? Because the many policies are internal, confidential, but you can see if they have whistleblowing, what their code of conduct says, what their supplier code of conduct says, what their governance statement, sustainability statement, human rights statement, what do those things say as compared to the annual report? Because sometimes some things may say A, but the other thing may say B. So those are things that you should be thinking to look out for when analyzing investments from ESG/integrity perspective. So as I'm from ethics and compliance, so one of the things that companies can do promote ethical behavior and culture, integrity, and investing is to screen companies for signs of issues like corruption, fraud, or human rights abuse. Always avoid firms that are embroiled in scandals that could damage reputation and pose legal risk. Tone from the top, communicate tone from the top, and importance considering sustainability impacts. Encourage research analysts to consider companies' integrity culture and speak out culture, because most analysts will only look at the profitability of the company. But I think now with the ESG push globally, there's a need to dive deeper when trying to write a report about the company's worth, before you promote that company to your customers, right? And you train dealers on escalation procedures if you see any red flags around the company behavior transactions. Foster open dialogue across business areas on balancing risk returns with ethical responsibilities. I think this was mentioned by Dr. Aida just now. Lead by example through having robust protocols and zero tolerance for ethical. So here's what I'm trying to say. Lead by example is if your company has a good ethics and compliance program or processes and protocols, then normally your staff would also think when they want to invest, when they want to promote their own company or promote that business, because they also want to be doing good, because ESG is generally about doing good and doing the right thing. Provide training on responsible investing and latest compliance governance standards, and recognize and reward individuals that champion in ESG integration. So everything's okay, and you ask yourself, right? And we talk about everything we talk about just now for the past 50 minutes or so, 1 hour or so. If everything's okay, ask yourself, are you okay to invest in or partner with a safe investment third-party customer, not from a legal, not from a financial, not from everything else, but just from policy is one, right? But also reputational standpoint. So As an example, is where I have advised in the past where you know the customer was actually in one of the countries in Asia that is currently known to be, or you know, it's under military ruling. So, and I said to the CEO, I said, okay, the country CEO, are we okay to partner with them? Because they've been our customers for a while. But then when I joined the company, I do some due diligence, renewal of due diligence of our customers, and I found that this company was known to be supplying um, aircraft parts to the military arm, to the Air Force arm, to the Air Force, right, of this military ruling, which is known to like bomb civilians in that country. So I said, I asked them, right, so of course the compliance policy says okay, the legal contract's okay, but are we okay to partner with this customer, you know, from a reputational standpoint, and also thinking from a, because this my previous employer, one of my previous employers had a big sustainability standing. So I said from an ESG side, are we okay to partner with them? And I've also raised questions on a vendor from Israel. I said, are we okay because they provide services in illegally occupied territories? So some of the things that, you know, we need to think about, like, of course, because some of these companies, they have not been sanctioned, they don't have negative news on them, but we know that they do this from revelations in blogs or statements by officials, discussions in parliamentary hearings about some of these companies' conduct. So I said to some of the executive management teams, are we, you know, I asked a question, like, okay, compliance allows it, right? Legal allows it. There's no issue from a financial standpoint, but from a reputational standpoint and an ESG standpoint, are we okay? So some of the questions that I feel that maybe I hope you think about when you know, when you want to do the right thing and not just about profit and loss. So it is a conclusion. Nothing new here, right? ESG principles are becoming increasingly important for companies to operate sustainability and maintain access to markets, financing, and talent. We talked about this before. Integrating ENC program ESG initiatives is crucial to build a culture of integrity and achieve ESG goals in a transparent manner. Companies can embrace ESG. Embrace ESG, they can benefit stronger financial performance, risk reduction, investor appeal, consumer trust, and employee engagement. Because this is very true. Because over the years we have seen, I think Dr. Aida mentioned Nike, but we also see a lot of companies that have had to change their business practices. Like we saw Zara, right? We see Gap. That's from the Bangladesh related because of the factory collapse, the textile factory collapse in Bangladesh that affected that business. And then we see companies like Amazon and Apple that have to, Amazon, for example, had to change, they increase their wages for their warehouse employees and change the working hours and shifts. Apple, of course, in China, through the company called Foxconn, they had to really audit Foxconn's labor practices because apparently it's very, very harsh conditions that were experienced by the Foxconn employees in China. And then we have Meta, for example, had to change their privacy, Meta being Facebook, had to change their privacy policies because they were allegedly said to sell customer data to third parties. There are also issues with regarding filtering, they say like violent or very dangerous contents, where they had to now implement a mental health support policy for the staff involved in filtering those contents, because those contents can be very stressful to be dealt with, right? So they can be changed through those push. Balancing ESG programs with business priorities can be difficult, as we've seen in Israel, as we've seen in the UK, we've seen with Shell and their carbon promises, we've seen the wind farm activities. We have seen a lot, right? There's so many. So what I want people to think here is, okay, you hear cases of people or companies being fined, or people going to jail for very big things, right? Like one MDB, for example, right? Okay, they breach some law, blah blah blah. Now we also need to think that, okay, what would have happened, right? What actually happened that made them do that, right? That made those cases very big, very interesting, right? So it could be anything from, corruption is very easy, but there are very a lot of nuance. Nuance here, means that there's a lot more very deeper story that happens in those cases that I think is very interesting to explore. And lastly, Malaysia's national ESG framework, is there as a roadmap to support local manufacturers, especially SMEs, to adopt ESG practices so that the SMEs can now compete globally, with especially in the EU, to meet ESG requirements. Integrating ethical compliance to our operations is crucial in achieving our goals and building integrity, culture of integrity. And I hope that the presentation will trigger a different way of thinking when looking at ESG and how it relates to a culture of integrity and compliance. So with that, it's the last slide. Thank you, everyone.
Okay, thank you, Encik Muzil, for the insightful presentations. Okay, now we may get to the Q&A session. Again, if any participants would like to ask questions, please raise your hands or unmute yourself. Or maybe we can just start with some questions in the chat box. Okay, so Encik Muzil, could you give us some color on how we can assess the relative importance of each components in the ESG and within a specific sector when we want to evaluate the ESG performance?
Okay, in specifics. Okay, I think this was made. I think that's a good question, because it's very difficult, right? So how do we measure if E is important, S is important, G is important? And I think that's a very good observation. And I asked myself the same question. So I think I don't really have an answer to that question other than there's a reference there on specific sector. Right? So I think that actually narrows down the question, because if you're trying to look at an investment or third party or whatever it is, a transaction involves, say, oil and gas, right? So oil and gas, then there's a lot of ESG pillars are going to be involved there, right? There's human rights, the S. There's of course an environment side, because oil and gas, how they use chemical, how they explore, how they manage waste. And then there's G, the G side, of course, then what does this oil and gas company has a policy, whatever. But then if you want to invest in healthcare, then healthcare is going to be something else, right? Healthcare is going to have more the S side, right? And also the G side, because healthcare doesn't have a lot with the environment, but there's a lot on social, right? In terms of how they treat their doctors, how in terms, and in governance side, the data policy, the data privacy side, and wages and things like that. And then and then you may see, and then depending on the sector, right? There's no right or wrong answer, but then again, it also depends on your risk appetite. So some companies may be okay to be exposed to certain risks when it comes to S or E or G for that company, but some companies may have a more robust risk, may have more risk averse stance to say, no, if the E, S or G is going to be low, then we're not gonna do business with this transaction or whatever. So I think I don't have a specific answer to that, but I think that's how I would view that question.
Okay, but then as a consultant, do you see that corporates in Malaysia actually on the right track in complying the ESG?
Okay, that's a very good and it's a very tough question, because I think the companies that care about ESG, I mean, let's just be honest about it, right? The companies that really care about the E, S, and G pillars are generally companies that have a lot to lose. By a lot to lose they could mean about shareholder value.